she is preparing to take over from the markets. Because if you look at, what is an LBMA a forward contract? You think it's a forward contract in gold. No, it's a forward contract in dollars, which is linked to the price of gold. I mean, the point is, once the dollar goes, London and COMEX are dead. They're finished. So China is setting up, if you like, the continuation market. So not only has she cornered the world's gold, but she's also going to be making the market.
Global financial dynamics are undergoing a monumental shift as Eastern powers systematically corner physical gold, threatening the foundation of Western paper money. Central banks are quietly consolidating monetary leverage, laying the groundwork to replace unbacked fiat infrastructure. Alasdair Macleod, a veteran financial analyst and precious metals expert, asserts that China is orchestrating a decisive monetary transition. Through decades of covert accumulation, Beijing has built an estimated reserve exceeding 30,000 tons of gold while opening Shanghai Gold Exchange vaults across Hong Kong and Saudi Arabia. China will execute a two-step strategy, officially revealing its gold-backed yuan to bankrupt Western deficit spending regimes. This strategic announcement is forecasted to trigger a catastrophic devaluation of the US dollar, rendering Western paper exchanges like COMEX and the LBMA completely obsolete. As faith in fiat currency evaporates, the shift toward physical settlement will redefine global finance. Now, we present the clips from Alasdair Macleod interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
China is still absorbing whatever gold she can get her hands on. I mean, put yourself in her shoes. Going way back to 1983, the People's Bank was appointed with the sole responsibility of managing the nation's, the Communist parties, gold and silver reserves. And basically, they started buying gold secretly, distributed it around various entities, some of the regional governments also. The PLA was a very big holder, etc. I reckon that by 2002, for the first time, Chinese citizens were then allowed to buy, because until then they were banned. Now, this basically cleared the way for the state to accumulate its holding, its secret holding of gold. I reckon that they probably accumulated something like 20,000 tons of gold by that point. Yeah, they've continued to accumulate it, and so has the private sector. Delivered out of the Shanghai Gold Exchange so far is about 28,000 tons from 2002. That's a large figure, as you know, obviously. Most of that's gone into jewelry. But we also have other figures. There is gold which is still stored within the SGE's network, which is owned by the banks, or ring-fenced, notionally owned by the banks, but ring-fenced to support their gold accumulation accounts, which they offer their customers, their deposit customers. We don't know how much that is. I would say there's probably something like 5,000 to 7,000 tons, something like that in there. You've also got ETFs, Chinese ETFs, which is not a huge figure, but all these things add up. I mean, and what the state has also accumulated since then, not just from its own mining activities. And incidentally, it overtook South Africa as the largest nation by gold mine output, back, I think, in 2007. I think that the state has probably got over 30,000 tons. And of course, you've got also at one stage they were saying, in 2005, 2006, they were advertising, telling their citizens, buy gold, it's good for you, or whatever the strapline was. So, they have understood right from the outset that fiat currencies do not last forever. They knew that based on history and also reasonable economic analysis, not just Marxist, but, Marxism on this didn't actually disagree, that, the dollar basically would end. So given that they were entering the world of Western capitalism, they knew they had to play the Western capitalist game, but they needed that insurance policy against the eventual failure of the currencies. You can see this from China's actions. The SGE is now opening vaults I mean, already in Hong Kong, they're expanding that to 2,000 tons, which is probably not going to be enough. They've opened one in, where else? The Middle East, Saudi Arabia. There are stories that they might be opening more vaults in Southeast Asia. I heard Dubai mentioned, but I think that's probably gone by the way for the moment. And there's even some speculation that they might open one in Switzerland, but I would discount that at this stage. Not only that, I mean, the point about these vaults is that you can deposit gold and get paid yuan, or you can sell your gold for yuan. In other words, that's the exchange, not dollars, but yuan into gold. And it's quite clear that, everything that she's been doing recently, she's not only taken over effectively the lion's share of the world's gold, physical gold, but also she is preparing to take over from the markets. Because if you look at, what is an LBMA, a forward contract? You think it's a forward contract in gold. No, it's a forward contract in dollars, which is linked to the price of gold. I mean, the point is, once the dollar goes, London and COMEX are dead. They're finished. So China is setting up, if you like, the continuation market. So not only has she cornered the world's gold, but she's also going to be making the market. So that, in a nutshell, is where China is and why she's there. And all she needs to do, she'll turn around. Well, I think she'll probably do a two-step thing. I mean, one way to kill off the military activities and, from America, NATO, and all the rest of it is to bankrupt them, basically. So the first thing she'll do, I think, is turn around and say, we have got, including off-balance sheet, we can demonstrate that we have got 30,000 tons of gold to back the yuan currency. Then watch the collapse in the other currencies. Incidentally, Russia can do the same thing because she's got about, the intelligence estimates that I've seen suggest that she's got a further 10,000 tons above what is on the balance sheet of the central bank. And we have America. How could she respond to this? I mean, for a start, we doubt that she's got the 8,130 tons, which she says she has. And what she's got, is it deliverable? Probably not, And with massive budget deficits and the coming collapse, if you like, of the private sector required to be financed by a fiat currency, there's no way she can contemplate going on to a gold standard. And then we have to, a mistake macroeconomists make, apart from trying to project things in straight lines, which is always a mistake, is they think there is this sort of simple relationship between the quantity of dollars in circulation and its purchasing power. No. What's far more important is the faith, if you like, that holders have in this commodity. The dollar is a commodity. Currencies are a commodity. And just the same as if you suddenly decided, or that humanity suddenly decided it didn't like diamonds and they'd be completely worthless. Oh, the same happens to fiat currencies. So, the collapse could actually be extremely rapid.
Sovereign debt vulnerabilities across G7 nations are accelerating a systemic shift away from paper credit instruments. Major foreign holders, including Japan and China, are actively liquidating U.S. treasuries and European bonds to support domestic balance sheets, putting intense upward pressure on global yields. Because fiat currencies represent mere debt obligations rather than intrinsic value, their stability rests entirely on public trust. Central banks recognize that physical bullion provides the only true final settlement for international credit transactions. As citizens realize rising costs stem from currency devaluation rather than price surges, a rapid panic dumping of paper money will erupt. This tipping point is projected to unfold in as little as 6 to 9 months, causing an irreversible flight into physical assets as fiat purchasing power disintegrates. Now, let's get back to the interview.
The vast bulk of international trade is settled in dollars. But the point is that there is a Chinese alternative now with the yuan and China's own CIPS system, CIPS system, which something like 150 countries have already signed up to. So it's quite easy for them to switch away from the dollar. Now, the reason this matters is that what we're seeing is a number of factors coming in to collapse the value of the dollar completely. China is aware of this. And indeed, this is why back in February, she told her banks, sell US Treasury debt. She didn't quite put it as bluntly as that, but basically that was the message. We now have Japan with its own crisis, which actually is they've hit a brick wall. Let's put it that way, in terms of their own debt, because they can't afford higher bond yields. And this is why the finance ministry turned around and told its pension funds, and it will also have told its insurance companies, and figures have come out which indicate that this is the case. You've got to invest in Japanese yen assets, in other words, government debt. And what does that mean? It means you've got to sell the foreign stuff, principally US treasuries, but also French debt. I mean, the French notes were being bought quite heavily by Japanese insurance companies going way back 3-4 years ago. And what's one of the worst performing bond markets in the last recent weeks? France. The yield has risen by something like 0.5% over the last month, in the month of July. This is a G7 problem. It's not just the US. The only country with a debt to GDP reasonably less than 100% is Germany. But its economy is tanking due to the ineptness of its government, partly, and also because the Chinese are producing real quality goods at a fraction of the price. And it's putting Germany out of business. The principal thing that they're missing is they don't understand the difference between money and credit. Everything is credit, except for gold, possibly silver, and that is in physical form, which is final settlement for credit, because all credit is a promise to settle. And you can settle it with other credit. And this is actually what happens. You pay someone who does some work on your home. You do that by bank transfer. The bank, you're coming out of your bank account, you have a balance, that is credit. The bank owes you final settlement. You pass that on into your workman's account, and he has now got, as a result, the obligations are swapped between banks, but he has an increase in the amount of promise, if you like, credit from his bank. So this is all credit, and final settlement is only physical gold. And this relationship goes all the way back to Roman times, early Roman times, and was really set out by the 3rd century AD, or CE as they call it now. It's been like that ever since. I mean, we talk about all sorts of, the banks are doing this, banks are doing that, governments want to do this, but that is not changing. And it's really that final settlement which really matters. Now, the implication for this is that when everything is absolutely fine and you're not worried about the outcomes and all the rest of it, you just deal in credit. You don't want to hold gold, because holding gold is actually it's immobilizing your wealth in the sense. But when that credit is under threat of collapse, you don't want to hold any of it, not even equities, because that is another form of credit. I mean, basically an equity, from your point of view, you have got a promise from the management of a corporation, which has issued that promise to you, that they will deliver an income stream or value to you as a shareholder. It's just a promise. You can't hold them to anything, even less of a promise than, let us say, owning a government bond. But, when the situation is such that the very value of a currency is threatened, then, you just got to get out of credit. And there is, if you like, a further implication in this. If you want to properly account for your wealth, you ought to measure it in gold, because with declining credit, that does not capture the loss of purchasing power of the currencies. And I would say that, what the central banks are doing, it's quite simple. They're recognizing this point. And of course, the last people to recognize it are the users of the currency. I mean, this was shown, in the various currency collapses back, in Europe in the early 1920s. The last people to understand it's not prices rising, but the currency going down are the users of the currency. Now, the moment they twig that it's actually the currency going down and not prices rising, then they dump currency as rapidly as possible to just buy anything, just to get out of it. We're a long way from that in terms of where we are, but in terms of time, it could be as little as 6 months, 9 months, quite easily, because it's been accelerated by the stupidity in the Gulf.
Dating back to ancient Roman law, financial systems have drawn a fundamental distinction between legal credit promises and final monetary settlement. Modern equities, government bonds, and bank deposits function strictly as layers of credit, contingent on institutional solvency and economic stability. When sovereign debt regimes face structural breakdown, holding paper promises becomes a liability, forcing capital into unencumbered physical reserves. Eastern nations have thoroughly prepared for this structural rupture by constructing robust settlement networks capable of replacing Western financial architecture. China's expanding international exchange infrastructure enables foreign entities to trade physical gold directly for yuan, bypassing dollar-centric clearing mechanisms entirely. Meanwhile, intelligence projections suggest Russia holds over 10,000 tons of unrecorded gold reserves alongside its central bank balance sheet. As Western nations struggle with unsustainable fiscal deficits, they will be incapable of returning to a gold standard. Consequently, the transition to physical settlement will force an immediate repricing of all asset classes measured in hard money. When global trust in paper currency snaps, paper derivatives will collapse, leaving physical bullion as the primary anchor of international trade. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.